I'm Alan,
And I'm Sarah
and we're the KLAS Team.
at Realty One Group Dockside out of Myrtle Beach, South Carolina.
And today we're going to talk about what could go wrong before closing. Because there's a million things that can derail a transaction. So Sarah, you want to talk about just some of the things that can happen?
Yeah, so we talked about yesterday's video, inspection and due diligence. You've got those all resolved. Now what could go wrong if you've got past all of that? Appraisal. So let's just say the appraisal came in low. What would happen? What have we
there
seen?
really are two options. Well, three if you really want to push it. One is you could ask the seller to come down to the appraisal price. They say no, now you're left with two choices. Come up with the difference your own, or you walk away from the transaction. Because the contracts we write are contingent on the appraisal. So if it did not appraise, that now becomes an issue that's outside of due diligence.
I mean, during when the market was peak and it was a seller's market, people were paying over. We talked about that in previous videos that people were paying $10,000, $30,000, even $40,000 over. But right now, not the case. Buyers have negotiating. You should never be paying more because you have plenty of options. So just remember that. There could also be mortgage underwriting issues. Buyers should not be making major financial changes. We'll get back to that when we finish this video up, but that could happen. Like that could change if you make financial changes, and we can talk about what not to do and how to prevent that from happening. Talk about liens, title work.
So, every single, real estate transaction, title work is done on it, and that's to make sure there are no liens, second mortgages, third mortgages, anything that has to be. When Sarah and I first started working together, we had a house, and for some reason, the tax map numbers, everything wasn't lining up. No. Turns out they had the wrong tax map number for the house, and that house had a $6,000 lien, but it was from the previous owner from 1974. Yeah. So they actually had to get a letter from the bank that they were not pursuing it, so it would close.
Yeah, so those are some things that can hiccup. And we had another one recently that had 12 liens. And yeah, sometimes the sellers have to bring money to the closing table. So
if it's that severe.
And if they couldn't, then you're not going to close, and it's probably going to go into full foreclosure. So that's something that could happen. Nothing's ever, just because you're approved doesn't mean everything is, there's things that could happen beyond whatever. So just be prepared. This is what this is about. Not to scare you, but to be prepared and have your ducks in a row. The other one is insurance, and this is why Alan and I have harped on this every time we say, especially in our area with flood zones, you need to contact your insurance agent in advance and make sure they'll even write a policy, because if you didn't, that insurance, and you are getting a loan, then you might not be able to buy it because they're not going to write a loan on a property you can't get insured. So.
And you would want to do that during due diligence, not after due diligence is over.
But this is if anything changed that could throw a curveball if you didn't do your homework. So also the final walkthrough, we have seen it rarely. There was one time that a seller ripped out the security system, which is considered affixed and permanent to the structure, and it is now we have these forms that say this is staying, this is conveying, because that way there's an agreement, so there's not a disagreement. So everybody is aware that this is the things that we're supposed to stay. So make sure you have all of that in the contract prior to, so there's no disagreements. And if they did damage this and you find out about it, that could affect closing. That's why we say final walkthrough. When we say that, that's what we mean.
Yeah, and it's usually done either that morning of closing or the day. We like to do it the day before.
In case there's a problem.
In case there is a problem, this gives time to get it resolved. And maybe, if need be, get a credit for the buyer.
Right, those are the times that you can get those things resolved. But closing day, so the county, as Alan mentioned, there could be issues with recording. During COVID, it was an issue, and it could take up to a week. We don't see those as much, but it could be an issue. If you choose an attorney that doesn't do what's called table funding, you have to wait on the county to record before you get access and the seller gets their funds. With a table funding agreement, the attorneys we work with, they will enable the seller to get their money and access before it's recorded with the county. which is very helpful in case it's a weekend.
So once they receive the money from the mortgage company in their escrow account, they start dispersing everything to everybody, and the transaction's considered complete. Whereas some attorneys don't do that, and then you have to wait until it's recorded. That may be, if it's late in the day, it may not be till the next day.
That's right. I think we're going to go and do a part 2 because this is a lot to cover. We're going to talk about what not to do when we're talking about things buyers can do to mess up after due diligence, and we'll get to that in a bit. But you can comment below if you have any further questions about anything we covered. You can go to our website, www.clasteam.com, KLASTEAM.
Or you can reach us at 843-699-6886, and you can text us or call us on that number, and you'll get Sarah and myself or both of us. And remember, if you're going to buy or sell, do it with class.